welcome to the Courtenay podcast. And I cannot wait for this discussion. I'm super excited. I'm looking forward to introducing you to all of my guests today. The first one is Craig Wencluse. He had actually reached out to me to have this roundtable discussion. I've been having a couple of discussions with him on his show. Not that I have much of a finance background other than somebody who buys things and, tries to save money. But I don't have a formal finance background, but I've been tracking a lot of the underpinnings of what's going on in the financial industry, more from a philosophical, I guess you could argue somewhat theological perspective as well, and technical. Because there's a lot of overlap there. So a lot of the stuff that I've been working on has been feeding into that. So we've had some great discussion. And of course, Matthew Crawford is no stranger to this podcast. We've done some incredible collaborations before. And Aaron Day is a new welcome. And we're going to be talking about the financial markets, what's going on with some of this, emerging technology, the cryptocurrencies. We had the recent executive order banning the CBDCs, which is great, but I think we should be cautiously optimistic because some other things are looming. And I don't want people to just be pacified that the CBDCs are gone in the United States and now we can just, all be rest assured. So I think that's what we're going to discuss today, and some other interesting concepts as well. But first, I'm going to let each of them do a little brief introduction because I don't know that they're all that familiar with each other, and I want you to be familiar with them as well. So, Craig, since you requested this, maybe you should start.
Okay, sounds good. So I started trading probably about, a little over 30 years ago. I probably spent, sadly, or maybe good, I'm not sure whether it's good or bad, but probably 100 to 120,000 hours in the markets. So I started off trading. I worked for a firm down in Florida. We built models for the big pension funds around the world. And so then I had the ability to test a lot of things. I went to Chicago, traded on the front end of the yield curve, which is basically the euro dollars, on the floor as it was going from the floor to the exchange. So I got to watch that whole process take place. And we built a trading firm. So we got to deal with, I got to deal with a lot of the talking heads at the CME group. A lot of these guys have turned into World Economic Forum people. And so, you kind of reflect back on the process, 20 years ago, 25 years ago, when all that stuff was going on. And then I left, got involved in some big cattle operations, farming operations out in Montana. We did a like-kind exchange, moved it to Nebraska. The whole time I was building models and running a commodity trading firm, what's called a commodity pool. So kind of like a hedge fund, but just in the commodity space. And then I was also, you have to be a CTA, which is a commodity trading advisor, to do that. So I did that kind of stuff and then managed money for a while. And then I got to a point where I just wanted to manage my own money. And so I've been working on quantitative models since then. And really, when you start doing that, when you're looking for the truth, you can't avoid some of these things that we're going to talk about today, which is, watching like 9/11 or watching the 2008 real estate crisis or long-term capital management or the Asian currency crisis or COVID. And so you really get into those kind of things. And, and a lot of the mainstream media in the financial space really doesn't cover this stuff. They really don't. They just skip right over it, and it's amazing to me how they can do it. It's amazing that you can have that big of an issue and they just completely skip right over it. And that is really why I wanted to do a show, because, I kept hearing people say the dollar's going to zero, the dollar's going to zero, the dollar's going to zero. And ultimately the dollar is probably going to zero, right? But since 2008 financial crisis, the dollar's been in probably the most beautiful uptrend that you can see. And now granted, it loses. We can talk about all the different things around the dollar, but bottom line is the dollar's been going up. And why that's so good for the US is that it's a stable currency, right? And we'll talk about different stable coins and stuff, I'm sure, today. But the dollar's been a stable currency for corporations to basically transact in. So slightly moving up gives a lot of corporations a huge advantage because they have money in the dollar. The dollar's creeping up higher. That gives U.S. corporations that are domiciled in the U.S. a real advantage over other corporations because they don't have this drift that keeps eating away at them. So that was really the reason I started doing the show World HD, and I do it every day, Monday through Friday. And, we go through different topics, currency, debt, equities, commodities, stock market kind of stuff, all that. And then we talk about these topics, right? And try to bridge this big gap from the financial space where everybody has their money. They willingly just hand their money over to BlackRock and Vanguard and all these big institutions. And they don't really know how to take it back. They don't know what to do with it. And they don't really understand what's going on. And so that's kind of where I'm at this point in, my career is I trade every day still. So I'm aware of the markets, watch things, feel the risk, feel the pain, when you get it wrong and when you get it right. And just trying to, really try to educate people, from the ground up on the financial space and how it ties in with all the stuff we're going to talk about today.
Awesome. Matt, you want to go next?
Sure. Well, I have a little bit of overlap with Craig's experience. I left college to go work on Wall Street for a few years, worked for a couple of the large hedge funds, D.E. Shaw, where I traded bonds, and then Susquehanna, and then a couple of smaller firms. Then I spent 14 years in educational technology. And when I retired from that, I found out about Bitcoin, and within a few months had jumped in and started trading again, did that for a bit. And then this pandemic thing happened. And since then, I've been trying to assess statistics from the pandemic and figure out what was going on behind the scenes. I'm just going to go ahead and throw something out since Craig brought up the dollar. I keep wondering if we're in this period where the dollar is going to eat all of the other world fiat currencies, and then it will itself collapse into possibly Bitcoin, but into whatever comes next, or there's some chance that it just continues on as the world reserve currency. But I tend to think that it's going to melt up as it soaks up all the weaker currencies first.
So maybe we'll have Aaron go first, and then we'll answer that. How does that sound?
So my background is I started out as a serial entrepreneur in the high tech space about 30 years ago. I dropped out of college, started my first company, then spent a little bit of time in venture capital on the dark side, realized that I wanted nothing to do with that, and that venture capital actually has nothing to do with capitalism, but that's a story for another day. Then I started a healthcare company in 2004, which became very successful. Clients in 43 states. It was profitable, and it was destroyed by Obamacare, Dodd-Frank, and Attorney General Eric Holder. My company wasn't explicitly targeted, though. I was literally collateral damage. No, I don't think anybody in the federal government knew who I was or who my company was. We were just the unfortunate, at the wrong place at the wrong time, but with a bunch of ridiculous, poorly designed government regulations. So that turned me into a kind of a full-time liberty activist. I moved to New Hampshire as part of the Free State Project, which is a movement to get 20,000 people to move to New Hampshire and make New Hampshire the beacon of liberty for the world. I became the chair of that for a while. I got very involved in politics. My wife and I ran various organizations to help recruit and get over 200 people elected at the state level in New Hampshire. And we even got involved in other political campaigns. But ultimately, by 2018, decided that politics isn't the way to go. And I had learned about Bitcoin in 2012 through the Free State Project and had been using it as far back as 2012, and then decided to exit the banking system altogether, realizing that the dollar itself and fiat currency is the source of a tremendous source of most of the world's problems. And it's not just the US version of it. All fiat currencies suffer the same fate. They all fail. Fiat currency has a 0% success rate. The average fiat currency only lasts about 27 years. And they follow a very repeatable cycle in terms of why they collapse. There are 7 main reasons fiat currencies collapse. And so I decided to exit the banking system and have been living on crypto, gold, and silver ever since, and was getting out of activism. But then COVID happened, and I noticed that a lot of my friends, in particular at the intersection of liberty and crypto, were having their businesses destroyed or being thrown in prison by the federal government. And I wanted to understand, well, why specifically these people? Because they weren't even engaging in illegal activity. That's when I did a deep dive on what's going on with CBDCs and the fact that now 134 countries representing 98% of the global GDP are at some stage, more than half of those are beyond just the research phase and moving towards implementation. And then in 2022, Joe Biden signed an executive order that both authorized the U.S. to explore CBDC while taking a whole of government approach to cracking down on crypto. And so when I realized, okay, bingo, that's what's going on. That's why crypto is being regulated. And then once we have the CBDC, it's the great gateway to complete digital tyranny, social credit scores and everything else. So I dropped everything that I was doing, wrote a book called The Final Countdown, I actually ran for president of the United States as a Republican to elevate this issue. Vivek Ramaswamy read my book. I hounded him in New Hampshire. We had 3 conversations about it. It's part of why he pushed Trump to come out against CBDCs, and then became a fellow at the Brownstone Institute, where I write about these topics. And my wife and I have been traveling around the country and now around the world, both warning people about CBDCs, but also teaching people how to use alternative currencies. And more recently, I've been spending more and more time educating people about the victims of Biden's Executive Order 1467, because although it's great that Trump repealed the executive order, he did not repeal the consequences of the executive order. And so there are hundreds of people still living under the daily stress of Biden's lawfare.
So, wow. So all of you touched on a lot of things that I'm, very curious about your answers and also very concerned about. Let's start with what Matt had proposed about the dollar. So I want to, before we open it up for discussion, just say that I know a lot of people, Aaron, you just pointed out that most fiat currencies, inherently just fail. And I think a lot of people are waking up to the fact that it is a fiat currency. And so it's intrinsically dependent upon the lie being believed in order for it to work. So I'm very concerned because even if it implodes, organically, like enough people wake up to the lie and therefore it takes the whole system down, or whether it implodes, is deconstructed intentionally. Either way, I think the ramifications of that are going to be catastrophic. I think potentially millions will die as a result if that were to happen without, and this is the caveat, unless there was some sort of not just alternative system in place that was truly not a fiat currency, truly backed by something, but that was also had a bridge to it, because people can't, it's not like you can just take down one system that not just the United States is dependent upon. A lot of the world actually depends on our fiat currency, unfortunately. So if you just take that down, what are people left with? It's not like you can just pop something else up and, there's going to be a smooth transition. There would need to be some sort of a transition in place. So I'm very concerned about that, because I do think, without that, millions literally would die, potentially. It would be really catastrophic. So that being said, that doesn't mean that I support fiat currency. It just means I'm not sure how to navigate that. So, we can address Matt's question about the dollar and all the points you just raised, Aaron, and what I just brought forth.
Let me bridge something here. So Matt, I'm in agreement with Matt that I think a dollar going higher is what blows the system up, because a dollar going lower feeds into the globalist, right? It tends to be inflationary, right? A dollar going down tends to have inflation. Now, not always the case, but I generally, that's the way I like to think of it. A higher dollar is somewhat deflationary. And if we go higher, what happens is, and this will kind of bridge some conversations I've had with Aaron and then what Matt just said, and a dollar melt up, in that if the dollar goes higher, what happens is there's so much debt around the world, right? I mean, the world is just awash in tons and tons of debt. And Aaron and I have talked about this a couple of times. But what happens is, if these corporations and these companies, right, if they have debt that they owe to the United States, that's dollar-based debt, and they have to pay that debt back, and the dollar keeps going higher, then essentially they keep getting further behind the game, because they have to get more dollars to pay that debt. It's slipping away from them, if that makes sense, right? It's outpacing their. So if they have a fixed payment of, let's say, $200,000, and the dollar goes higher by 5%, well, now that goes up to $210,000 payment, right? So now what happens is they need more. The world starts hunting for dollars, and it starts searching for dollars. And so this gets into, the Federal Reserve expanding and contracting the money supply, and you could go for years on that topic. But I think what Matt's saying, I agree with him that a higher dollar causes a system to implode. Okay. And what you're saying, Courtney, is there a landing net? Do we have something to fall back on? Is something in place? And bridging that with what Aaron and I've talked about is, that I think fits with what Aaron's thinking too, is this amount of debt that's out there is what ultimately is going to blow the system up too, right? And we know that's coming. It's just a matter of how does that unravel? What's the final straw that lands on the camel's back that breaks it? And that's the big question.
Yeah, I mean, I think the dollar's been the global reserve currency for over 80 years. But if you look at the 5 previous global reserve currencies, they lasted for about 87 years. And then that's the average. And then they failed. And so this is one of the things that's so difficult for people to even contemplate, is the idea is that for everybody's actual lifetime, the dollar's been the global reserve currency and nobody's ever questioned it. Or even most people have never even thought about the fact that anything existed as a global reserve currency before the dollar. But the truth is that the dollar is following its cycle. The challenge with this is that we know it's going to collapse. And usually there's this boom and bust cycle of nations that happens when a global fiat reserve currency collapses. And then there are millions of people do die. Usually these things are correlated with wartime events. And then something else picks up and then the cycle repeats. So to me, the most important thing with this is if fiat currency has never worked, then why are we going to repeat the same thing expecting a different result? One of the things that I've been working on, which is not going to be an end-all answer to all of this, but I'm creating a gold-backed privacy coin that is backed one-to-one by gold, but that's separate from the state, that you will be actually able to redeem the tokens. So you'll be able to use the tokens for day-to-day transactions with low transaction fees. It'll be private, but if you want to redeem for physical gold, you'll have to go through a KYC process at that point, but it will be backed by gold in vaults in different countries around the world. And it will be separate from government spending and separate from government debt. I think those kinds of solutions are kind of interesting moving forward. But I think what we really risk is, I think we're dealing with a controlled demolition. And this is based on what I've studied in terms of the development of CBDCs.
I agree.
I fear a controlled demolition where, yes, everybody's panicking. People are worried that millions of people are going to die. And then what are they going to roll out? A global central bank digital currency with UBI and everything else. And it'll be hailed as a savior
and
in an
surveillance.
emergency situation.
And biometric surveillance. That's really, so what you're proposing with a crypto type of digital currency that has a backing by gold, that's obviously not a fiat currency. I really like the concept of that, as long as there's a way to, have privacy and security that is not done through digital biometric surveillance and access. And that's really that's when you talk about like tokens, that's where they want to go with everything. Everything is like a UBI that's tokenized based on your data, and largely biometric data, because they're trying to create a biodigital convergence, transhuman type of society, and that's the way that they can do it. So
yeah, and this has been something that I've struggled with as a Bitcoiner, which is, I got into Bitcoin thinking of it as something, that would be, digital gold, that would be a non-inflationary currency that would solve some of the problems that we're talking about. But then, I recognize that the rest of this cryptocurrency sphere probably can't survive without something that ascends to the reserve currency status. And that might be a difficult conversation to have. And I'm not even sure I can put it into words exactly why I believe that, but I believe that one must become the reserve currency in order for the others to sort of succeed in common usage. But Aaron, question, would you mind, could I beat on your gold coin crypto idea?
Sure.
So suppose Bitcoin does ascend to reserve currency status. What happens to gold? One thing that I've thought through about reserve currencies is there isn't exactly just one. There's a most common one, right? Like dollars might be 60% of global banking reserves, or 60-something%. I don't know where we are right now. But precious metals have always served as some of those reserves. Within banking and monetary systems. If Bitcoin just takes over all of that, then everything that was more valuable because it was a reserve currency will suddenly be devalued. And I think that the intrinsic value of a lot of precious metals like gold is actually a very tiny proportion of its value. I think that gold is it's sort of barely used in technology. Silver would probably actually retain a greater percentage of its current value, even though it has a higher, has a higher mining rate in terms of replenishing supply. But I think that gold might, if gold's, I don't know, is there $9 trillion in the world worth of gold? That value might go down 80, 90 something percent. I don't even know the answer. And then if anybody's holding those stable coins, they didn't hold their value in sort of one big collapse moment.
Yeah, I think the probability of that happening is almost zero. First of all, Bitcoin was not supposed to be digital gold. Bitcoin was supposed to be peer-to-peer digital cash. Bitcoin was hijacked by people with ties to the deep state and ties to traditional finance. This whole narrative shift of it being digital gold is completely divergent from its original intent. So the way I describe Bitcoin is slow, expensive, non-fungible digital surveillance gold. And I'm writing an article about this, but it is slow and expensive if people were actually using it, which people aren't right now. The mempool has actually been cleared because there's such little activity on Bitcoin at this point in time. But the truth is Bitcoin can be tracked. And this is something that a lot of people didn't realize early on, like Ross Ulbricht and even some friends of mine.
So long. I'm glad that you're saying it because you have more of a background in than I do. But yeah.
Well, it's actually fascinating. I think it's part of the reason my friend Roger is facing 109 years in prison is because he just wrote a book called Hijacking Bitcoin, and he had released it. And then 3 weeks later, he was arrested, which is pretty peculiar timing. But the thing about it is it was absolutely hijacked, but there are people that will argue, well, so what, it was hijacked. This is a better use for it. So Michael Saylor will say, well, okay, but we don't need a replacement for the dollar. We don't need a replacement for MasterCard, as he says. We should comply with KYC. We don't even need to have it in our own self-custody. We just need a store of value. The problem with this argument is it's based on several facts. And one of the big facts is that it has a limited supply of 21 million. That's not true. The 21 million supply can be changed, and they're already softening up the propaganda to increase the supply of Bitcoin. In fact, they will have to increase the supply of Bitcoin because the original design of Bitcoin, and I don't want to hijack this conversation with this, but the whole point of Bitcoin early on was miners, these computers, people that were operating computers that were solving math problems would get a reward. And early on, it was 50 Bitcoin every 10 minutes for solving these math problems. And if you were the first one to solve the math problem, you would add the transactions to the blockchain. And so you had this competitive system where these computers were competing, but this reward gets cut in half every 4 years. So it went from 50 Bitcoin every 10 minutes to 25 to 12 and a half, so on and so forth. And eventually it stops, and there's this magical supply cap of 21 million for Bitcoin. But the whole reason for the rewards to begin with was as an incentive system to secure the network until such time as the transaction volume was enough to actually fund and sustain and secure the network. The problem is, like technocrats, they used manufactured scarcity to limit the amount of transactional capability from Bitcoin. It's 1 megabyte blocks, but all you need to realize is that Bitcoin can only do 7 transactions per second. And you can only charge so much for the transaction. So at some point, the miners will not be able to operate their machinery because there won't be enough transaction fees. They will need to continue to have the mining rewards. So at this point, there's already kind of a movement about, and you can read in the BlackRock ETF and other risk factors, they're already priming people for the idea that they're going to increase the supply of Bitcoin. So that's an important part of it being digital gold. But the other reason that people like it as digital gold is they say, well, look at the price chart. Well, the problem is when you realize that a stable coin like Tether has arguably, and this is, people are still trying to analyze this, Tether is a stable coin, a digital token that's allegedly backed by the dollar. But this is a coin that's never been able to pass an audit. It now has like $140 billion market cap. And its primary use has been in purchasing Bitcoin. So it's quite possible that a pretty high percentage of the reason that the price of Bitcoin has been going up is that you've had this fake digital reserve printing fake digital tokens and using it to buy Bitcoin. So if all of a sudden the argument for Bitcoin as digital gold is limited supply and its track record on price appreciation, which may be tied to tether fraud, then it maybe doesn't look so good as a digital gold option.
Yeah. Well, I watch the correlation between Bitcoin and, the stock market. And to me, it feels like it's done exactly what Aaron's talking about, where it's gone from, this thing that it was supposed to be a transaction, peer-to-peer, mechanism, right? That was going to be, a replacement for a fungible currency that people could transact in. And then as Aaron's talked about before, they slowed it down to 7 transactions per second. So it just can't even compete with federal systems that are being put in place, right? I mean, they're like thousands, hundreds of thousands of times faster and more robust. And so with the stocks, the problem with it is, they did a switcheroo on us, in my opinion, where it was originally a transaction mechanism and now they switch it over to digital gold. And it's just, to me, it's more digital stock market, digital risk on, risk off, because it tracks, it's either leads the stock market by a little bit or it lags the stock market by a little bit. But if we saw a 20% sell off in the stock market, we're going to see anywhere from a 10 to 40% sell off in Bitcoin would be my guess, unless something changes, right? Unless somehow, somewhere, somebody finds value in it for some reason, and it does become a digital gold. But I haven't seen that correlation happen yet. And that's what gets me concerned with Bitcoin.
No, I didn't answer the part about, so I'm not even a maximalist for my own coin. Like I'm launching, the only reason I'm launching this is because as I've been living on crypto, gold, and silver, I've been trying to onboard merchants. And the one thing merchants say is, well, we know the dollar's losing value, but crypto's too volatile. I can't hold crypto and pay my vendors and pay my employees. I have 10% gross margins. If we have 40% volatility, that's down 1 month, I can't wait for the next month or I'm going to be out of business. And so, but I said, well, what would you think about a stable coin that's actually backed by precious metals? And so this is the difficulty we've had in the adoption of cryptocurrencies for day-to-day commerce is this volatility issue. But I hope there are multiple competitors. I just like the idea of actually asset-backed cryptocurrencies that are private, and it could be gold, it could be silver, it could be land. In fact, I hope it's all of the above. I think maybe this is the way moving forward is more competition where the tokens are backed by real assets, but where the assets are separated from the state. To me, that is a compelling option that gives us a whole new menu for mediums of exchange.
Yeah. Well, and you take it back to the simplest form of, transacting, right? When the U.S., when settlers came over to the U.S. and they're transacting in, raccoon hide and this and that, whatever, right? Those things are changing value, right? As the U.S. became more established, metals became, something that Europe wanted, and the textiles became something that Europe wanted, right? And so, it was this. There's always been a transaction mechanism, and I think that if we keep that in mind, right, I think what happens with the dollar is people tend to get lazy and they just, take it for what it is. And they don't think about having to transact in something that changes a lot, right? One year, raccoon hides, it's really cold out. So raccoon hides are really valuable and they're up in value, right? Whereas maybe metals aren't as high in value. It really comes down to being that simple. And I think Aaron's right. You attach it to some kind of an asset backed thing. It should give it more stability because digital is a place we haven't been yet really with currency. We haven't seen a true digital currency really function well yet, right? The concept's there and there's a lot of effort going into it. And that something's going to come out of it. It's just, what is it on the other side? And I like the idea of the asset back because at least it gives it something tangible to hang on to, right? A tether, right? Tethered to something.
Yeah, and this gets into a weird point in the tokenization conversation because now we are talking about tokenization of a lot of assets, at least, right? I think that the concept of tokenization, it depends on having some sort of an adjudication of whether or not something is actually held, right? Like we haven't seen the gold in Fort Knox in decades. We haven't seen a photograph or a video or anything like that. And that's always sort of a weird little trivia, piece of the conversation about, what do we know about our monetary system? Land is easier, certainly. precious metals are easier than most things that might be tokenized. I know there are people who want to tokenize their goats and tokenize like every form of property. And there's some point at which then there's a complete destruction of almost all privacy, because you have to be able to ascertain whether or not something is on the balance sheet, whether or not something exists, and whether or not it is retained as ownership. And then suddenly you have payment for security of the asset.
Like the world coin that has their orb, right?
And I think that the entire Bitcoin question, really comes down to I think of Bitcoin as a solution to the optimization problem of all those things together. Security of the asset, and all of those factors. Whereas I think that becomes more difficult with tokens. But I'm gonna go ahead and throw this out just because I feel like it's necessary for the conversation. I guess I'm in disagreement with Aaron and Craig. I actually do believe that Bitcoin was intended to be a reserve asset. In fact, one of the early conversations between Satoshi and Hal Finney says, the way this would end up, Bitcoin's total value would be between $100 and $300 trillion. And when you stop and let's take the midpoint of that, that means about $10 million per Bitcoin. And that is, reserve currency. That's not, a high velocity currency type of. You add all the high velocity currencies in the world, and they don't look like that. In fact, that is one of the, I think, a high low velocity is one of the weird things that makes it hard to think through whether or not Bitcoin can be both a reserve and a common peer-to-peer transaction. Maybe the technologists will come up with something on layer 2 or layer 3 or layer 4, or I don't even know the definitions when I hear some of these conversations happen, but it may be that we can converge into a common currency that serves as reserve and high velocity, but it is a tricky thing, right? And it is that change from high and low velocity that can cause economic collapse with fiat currencies. Because if suddenly, fiat currency, the amount of it that's being transacted in the marketplace changes. If the velocity changes, then the value of it changes with it. And if the world has a shift, then suddenly there will be a lot of people, left in a cargo cult economy that they don't know how to easily, get back on track with. And that's why, we talk about disaster scenarios within this transition. I do think that that Satoshi probably was just a representative of a group of social engineers and not somebody attacking the system. That's not to say that Bitcoin is necessarily bad. A lot of technologies used by, I think, the central planners of the world can be good technologies. The question is whether or not they're used symmetrically to the benefit of everyone or asymmetrically, as often weapons are.
No, go on. Yeah.
The title of the white paper is Peer-to-Peer Digital Cash. Hal Finney's not Satoshi. And the original, when you read what Satoshi said, he talked about Bitcoin out of the gates competing with Visa and MasterCard and doing transactions at scale. And there was originally supposed to be no block size limit at all. 1 megabyte was put in as a temporary limit as a security measure. So, I think it's clear it was supposed to be used as digital cash. Whether it was also supposed to be a reserve asset is a separate conversation. But as I mentioned, because of the security model and the lack of transactions, they're going to have to increase the supply. And if you have to increase the supply beyond 21 million, it loses the property that everybody is evangelizing as its use as the hardest asset ever known to man and this great store of value. So again, I don't think Bitcoin is it. I think Bitcoin's probably, it's interesting. Trump talked about, I think I saw it today, possibly moving the dollar to the gold standard, not back to the gold standard, I should say. He didn't say back to the digital gold standard. So I'm not sure that Bitcoin is going to be part of a reserve currency. But the one thing that I wonder about all this is, why do we keep looking for this one currency? That's what the technocrats want. What I've written a couple of articles about this on Brownstone. They're really lengthy. One of them is called "You Might Own Nothing Sooner Than You Think," and it goes into detail that talks about tokenization. And when you look at CBDCs, and in particular, the most advanced retail CBDC project in the United States is called Project Hamilton. Project Hamilton is a collaboration between MIT and the Federal Reserve Bank of Boston, and it actually has as one of its co-authors, Corey Fields, who is a Bitcoin core developer. I won't go into the detail on this, but when I say Bitcoin was hijacked, literally it went from being funded by a nonprofit group called the Bitcoin Foundation to the changes cemented to make it Bitcoin gold with this whole narrative of second layer solutions was funded by MIT, the same guy who funded all 3 US CBDC pilots. So at the same time, they were saying, well, Bitcoin should just be this slow, expensive store of value, but they developed a CBDC that can do 1.8 million transactions per second. That is what Project Hamilton can do. Now, why this is important is a CBDC is just tokenized money, right? That's essentially all it represents. But what they're building is a platform to tokenize all of our assets in the same way that they've tokenized money itself. There's another pilot called Regulated Liability Network. So they want to take our stocks, our bonds, our homes, our mortgages, and everything, and tokenize it with the same surveillance features as money itself. So they will be able to program, track, and censor everything, monetary and non-monetary assets. The tokenization that I'm interested in, and for my token, but even outside of that, tokenization is inevitable. Tokenization actually makes sense in a sense that most of the global economy runs on centralized databases, which can be and are hacked all of the time and create over $1 trillion of economic loss every year. This has probably happened to all of us. It seems like every week there's a new email about this database has been hacked or another. Tokens solve that in a way because if you're using an immutable ledger, you don't have the being able to go in and hack, destroy, and alter records. But they can also turn into a dystopian scenario if they're centrally controlled. So this is why what I've been focusing on are privacy tokens, and I'm using a blockchain called Zano, which uses the same technology that's kind of behind Monero. So you're basically able to create privacy tokens. You can tokenize and privately trade your assets, monetary and non-monetary assets, using Zano. And to me, that's an interesting path forward.
I'd like to introduce something to the conversation. I think the question that I ask myself when I'm thinking about what's going to happen going forward is there a Gresham's Law tournament at play? And here's what I mean by that. Lord Gresham was the economic advisor of Queen Elizabeth I. And when Queen Elizabeth ordered, what's the right word, debasing of the currency, debasing of coins in the market, make them with a less expensive metal. What happened was suddenly the old coins disappeared from the marketplace. Well, where did they go? Queen Elizabeth wanted to know, and Lord Gresham explained to her, well, these coins are more valuable, right? They have more intrinsic value. If something happened, if there were a major economic upheaval, people could melt them down to make, swords and shields or whatever, whatever they're going to do with them. That's the intrinsic value of the metal. So there was a better intrinsic value. So people would hoard those coins while the less valuable debased metal was being traded in the marketplace. Ultimately, this presents this idea. What people are going to use to store wealth is going to be whatever wins the Gresham's Law tournament. And whatever that might be, I suspect that it's going to be Bitcoin, but I could be wrong. I leave that door open. And at that point, we have to ask, well, I guess that's one of the reasons why I actually think that the peer-to-peer words in the white paper are actually just rhetoric. I think that the people who were thinking this through did understand the Gresham's Law tournament. I think they were probably thinking in terms of that, but they presented it as something else in order to promote adoption. So it's one of the reasons why I don't just sort of default to, well, there are these words in the white paper. But going forward, I think everybody should be thinking about the Gresham's Law tournament. And whatever is not the winner of that tournament might still exist. We might have multiple currencies trading in the marketplace, and these will be higher velocity currencies, but they'll just lose value incrementally over time relative to whatever wins that tournament.
Yeah, I wanted to... Sorry, what? You want to go on? I was going to ask really quickly
I was
on
just going to say
that.
Gresham's law doesn't hold all of the time. So this isn't one of these things that actually we can count on as being fact. And I still don't understand why we gravitate towards this single currency. If the likely single currency, if there's going to be a single currency, is going to be an energy credit backed global digital currency that's pushed by force. But again, we have over 180 fiat currencies right now and 20,000 cryptocurrencies. I think we need more currencies, not fewer, or this idea that we will meld into one. I mean, it's been talked about for a long time that we would end up having one global currency, and that hasn't actually happened in the marketplace either. So, I think we need more choice. But whatever the choice is, it needs to be not something that is surveillable, because Bitcoin is now so trackable that it's become non-fungible. And the fact that it is non-fungible means you can blacklist and whitelist Bitcoin. And the fact that people are now buying it and holding it through ETFs makes it easily confiscatable. If what we're really facing, which you may or may not agree with this, but I think the big threat that we face is a global technocracy, which is all about surveillance. And the way you defeat surveillance is privacy. And Bitcoin is not private.
Yeah. And this lends to Courtenay real well. Let me just do this real quick, Courtenay, and then if you can comment on that, because I know this is your area. But so I use harmonics in markets, right? And markets are like anything, right? Like a human being, we breathe in, we breathe out. Markets do the same kind of a thing. And so part of that is we go from centralized to decentralized, right? From trading all these different kinds of things to one central fiat currency, right? World reserve currency. And so I think all this fits, right? Aaron's saying, and I think Matt's saying the same thing, that this currency, this fiat currency we call the US dollar, is going to fail, right? It's inevitable that it's going to fail. And so we're going to go from centralized to decentralized. And it's kind of that shotgun approach. We're probably going to get a lot of different things. And these different technologies are going to appeal to different people for different reasons. And so, we could easily break and shatter into a lot of different currencies, and that lends itself to privacy, right? Which is what Aaron's talking about. And it also lends itself to, the lack of technocracy, hopefully, right? And I think that's right in your area, Courtenay.
Yeah, that was a perfect segue to kind of my question. So I resonate with what Matt is saying about the term peer-to-peer being used in the white papers and being kind of a misnomer. I'm not saying, so my question would be, is it really possible to have true peer-to-peer? And I think it might be. But I think that oftentimes I've kind of noticed the same thing when I'm reading through this literature, and also when I'm studying various operating systems that are using these types of technologies. They use terms like peer-to-peer, gift economy, decentralized, they call it DeFi. And when you actually look at it, none of it is decentralized. None of it is true peer-to-peer. And really what they're trying to create is something more like a network state. This would be like bringing H.G. Wells' vision of world brain to fruition. He laid out how the roadmap to get to the world brain would be through the ultimate decentralization. So again, I'm not, disparaging decentralization. I agree with you, Aaron. I agree with you, Craig, that decentralization can lead to privacy, can lead to lack of surveillance, and that's what we want. That's, at least I'll speak for myself, that's definitely what I want. My real concern with a lot of these things is, I guess, a couple of things, and I'll throw this out to all of you. One is, does the dollar have to fail? I know we said historically fiat currencies have always failed, but is there a situation where maybe it could be tethered? We're going to get to tether too, but pun intended. But could it be tethered to something that backs it, whether it be precious metal or I don't love the idea of land, quite honestly, just because I know the agenda. So sorry, I'm all over the place, but my concern, I guess, just might simplify it, is I know the agendas. And so while these visions, for something to disrupt the agenda, I really support, and I hope they're possible and viable. We've already seen, if your theory is true, that Bitcoin has been hijacked, which I do think. I mean, I think there might be an element of both, I think. But either way, we see the trajectory of where it's going, or they want it to go. So most of these things do get hijacked. And so that's because there is a plan, and the plan is to centralize everything. And the plan is really to create this kind of neo-feudal transhuman society. And the way that they do that is by collecting as much biometric data as possible and using that to create, I hesitate to even use the term like a social credit system because it goes so far beyond that. It's social credit on steroids. Kroger is already using technology made by Microsoft where they use facial recognition, and then they would, have different, it was shut down, but they were, talking about having different prices based on that facial recognition. And the World Coin has their orb, right, where they do, optic recognition, and through that biometric data, they attach it to the coin, and then you have some sort of a rating based on this. And this is all tied to social impact financing, right, which they claim will, achieve essentially the SDGs, the 17 Sustainable Development Goals, which is what they're trying to achieve, which is a utopian. It's not possible. We're not going to get to net zero, carbon zero. We exhale carbon. This is not possible. But this is what they're trying to create. And no matter how many of us they cull, not to be crude, they're still not going to achieve this net zero. And I think the only way they could really achieve it is in a post-human world. And even then, they really can't, because where are they going to get all this energy to fuel all these data centers for all the AI and synthetic reality that they're trying to create, and who's going to create them, in a post-human world? I don't believe that the machines really are sentient or will be sentient. I know that that's kind of what the narrative they're trying to propagate. But yeah, so all that to say, I guess, what are your thoughts on any or all of that, and what do you see possible? And whoever wants to, sorry.
I think that the artificial intelligence, like you, I think the artificial intelligence narrative is being manipulated to make us think in terms of digital gods. Yeah. I don't think that it will ever get there. I think that it's been understood actually by mathematicians for a long time now that there is a monkey at typewriters problem in terms of how far AI can go. On the other hand, we are seeing experimentation with organic materials. Yes. That can long, right? And it's interesting. It's weird, and we have technology going on behind the scenes. I think that a lot of this is compartmentalized, and the public doesn't know, can't compete with it, can't even develop along the same lines with it, because we have such an occult sort of world system of control and development. The first hedge fund that I worked for, D.E. Shaw, I was shocked to learn when I went to New York and started working there that 70% of the employees were in Hyderabad, India. And what were they doing? They weren't doing finance. They were doing DNA computing, and David Shaw actually stepped away from, personally managing the hedge fund to do. I'm not sure what the term would be, but just generally bioinformatics at that sort of high level of genetics, right? Mm. And what's being done with that, I don't know, right?
I have a few guesses. Yeah.
But with current modern computing, even with quantum computing, there are just limits to what it is that artificial intelligence can do. That doesn't mean that it won't change the world. It's going to change the world. It's going to change the world. It's pretty dramatically, and I do think that they introduced the UBI conversation in order to get people used to the fact that there may be a very long transition at the very least, at which a lot of people don't know how to function in a job relative to what they were doing before, right? There might be, it may be that in the future that, humans to jobs get closer to a 1-to-1 ratio again, but there would be a very significant transition during that time. And UBI may be meant to sort of quell the chaos in some sort of short to medium term. I don't know. I'm just, it's one of the thoughts that's been ruminating in my head. But I'll step back from that for just a moment. I do think that artificial intelligence could be running a lot of the world economy, and that would be easiest using some form of a digital ledger, digital currency. And since we got on the privacy conversation, I personally don't believe that Bitcoin was ever meant to solve a privacy problem. I think that that anything that wins the Gresham's Law tournament that would then be used in the banking system, you wouldn't want you wouldn't want it to be a privacy coin. The reason that you wouldn't is because you want symmetric transparency, because either you have an asymmetric system, which I think would fail the Gresham's Law tournament, or you have a symmetric system. But the symmetric system is not going to be a private system because it can't be a ledger by the definition of a ledger, right? And so I think that the odds are in favor of the Gresham's Law tournament being won by something that is not a privacy ledger or system network, and that things that are privacy coins may be high velocity currencies that transact in the market. Though I do think that there's one possible caveat, and it's weird. I feel like I don't hear this conversation anywhere, but you could have Bitcoin treasuries issue notes, paper notes. And those could be scannable if you need to make sure that they are part of the treasury, that they're part of the issuance. And, one worry that people might have is, okay, well, notes get destroyed over time, and somebody's going to have to think through that. But it is possible to have one currency have a public, non-private, strong ledger form, and then to also have a form that gets traded publicly off of the ledger.
Well, it's actually possible to do that. So the gold token that I'm talking about, I'm issuing on Zano, which I mentioned before, and there are a couple of features of Zano. One is called an auditable wallet. So the actual gold reserves themselves will be able to be viewed through an auditable wallet that is public and trackable, whereas the tokens that are issued based on that actual gold supply remain private at the level of the transaction. So I encourage you to take a look at Zano and read the white paper and see what's involved with that. I agree. I don't think Bitcoin was supposed to be private, although one of Satoshi's last comments was that he wanted to work on privacy, or saw privacy as kind of a next big area of focus. I think that the technocracy thing, I don't know that the goal was ever actually net zero. I think the whole energy credit system is just a control system, and that's its intended purpose.
I would agree with you. Yeah. I wasn't saying that's the goal. I'm saying that's the goal that they use ostensibly as their excuse. Yeah.
And they've done a great job of scaring the younger generations into this climate alarmism. I mean, into states of absolute anxiety and depression over being a blight to humanity just by breathing. It's amazing what they've been able to indoctrinate on that. And I don't know, just as a side note, have you seen this Doconomy MasterCard? It's a MasterCard project that was live from 2019 to 2022. In conjunction with the UN. This is a credit card that people voluntarily signed up for that shut off if you use too much carbon. Well, MasterCard has been building these relationships for years. And even though that particular pilot stopped, you've probably noticed that they're tracking our carbon everywhere. So the ability to track carbon to financial transactions is already something that's being built from an infrastructure perspective.
Yeah.
What percent do you think that's in place, Aaron? How far along do you think that is? 20%, 40%? If they just scratch the surface on it, where do you think that stands?
Well, I think it's further along than I think any of us would probably imagine. I think just the fact that they were able to sneak that thing under our nose and that people were actually using this card. And when I talk to people, most people have never heard of it. But the tracking that's going on now, and then we talk about AI. So, whether AI develops general intelligence or not, I don't know. I love playing around and experimenting with AI. AI to me is a lot like tokenization, right? It could either become a freedom technology or it could become a tyranny technology. And unfortunately, if it's coming out of big tech, more than likely it's going to be a tyranny option. But I do like these decentralized options, like what Mike Adams, the Health Ranger's coming up with. I do like the fact that NVIDIA is launching this $3,000 supercomputer, so you'll be able to have a computer on your own desk. So with everything, there's a freedom versus tyranny aspect, and so I obviously always try to gravitate towards the decentralized freedom version. But I think AI makes it so much easier for them to implement social credit systems, to implement an energy credit system. So I think AI accelerates the ability to do that dramatically. And I fear, and I don't necessarily want to go down this rabbit hole, but that Elon Musk could be the ultimate weaponizer of this.
I would agree. I just want to interject one thing, two things actually. So in terms of them tracking the carbon, the USDA in 2022 put $3.1 billion towards a climate smart commodity project. So there's all sorts of technologies that are already being used to track like greenhouse gas carbon emissions essentially. And they actually gave Farm Journal $41 million. I can only conjecture that was for propaganda because I don't know what role they play in it. But this was all about the ESG requirements that farmers had to meet. And a lot of the farmers weren't able to because there were no heuristics for them, and they had no ability to be able to track what ESG requirements they were meeting. And so, of course, they were like, no worries, we'll step right in and take care of that with all of our new surveillance technology. And here you go. And then the other thing I wanted to say about the achieving net zero, I mean, the Club of Rome admitted, right? They wrote in their, Limits to Growth 1972 document. They admitted in their Global Reformation document in 1992, 20 years later, that whole narrative was propaganda. I don't remember the exact quote off the top of my head, but they actually said they had to come up with a common enemy in order to, convince people to buy into the lie and,